All right, so it is 12:10, and in the essence of everyone's time, I'm going to go ahead and get started. Good afternoon, and thank you for joining us on this Lunch and Learn. My name is Kim Buck, and today we're going to talk about some of the health and dependent care savings accounts that are available to you as an employee through the state of South Dakota. Before we get started, it's important to note that for all of these accounts that we're going to be discussing today, Discovery Benefits is our vendor for that. So that's the only vendor we allow for payroll deposits that you contribute to, as well as the state contribution. So again, we'll go over this more in detail, but I just wanted to give you guys a heads up. Today we're going to be talking about the health savings account, the dependent daycare flexible spending accounts, medical flex spending accounts, combination flex spending accounts, and health reimbursement accounts. So this looks all a bit daunting. So hopefully as we go through this, some of these accounts will make a lot more sense to you. Next slide, please. If you have questions during this presentation, you'll see a Q&A section at the bottom of your screen. Please use this button to ask any questions you might have, and we will address those at the end of the presentation. Next slide, please. If you have questions after the presentation concludes, you can email us at benefitswebsite@state.sd.us. And if you can't get all of that right then and there, again, this presentation will be in PDF format available after the session. So next slide, please. So let's first talk about a health savings account. A health savings account is only available with the high deductible health plan. There's two forms of contributions. There's the state, which is the employer contribution, and then there's personal contributions, which are pre-tax payroll contributions that you decide that you elect the amount that you want taken out per paycheck. A health savings account pays for covered medical, or eligible, I should say, medical, dental, and vision expenses with pre-tax dollars. The nice thing about an HSA is that the money is always yours. There are IRS maximum contribution limits, and you can change your HSA payroll contribution at any time in the year. So to go over this a little bit more, with the state employer contribution, as long as you meet certain wellness incentives, the three wellness incentives for fiscal year 21 were a health assessment, health screening, and then 100 wellness points. If you had single coverage at that time, the state will contribute $500 to your HSA account. If you have two or more covered members, that would be $1,000. The exception to these wellness qualifications is if you were hired on or after April 1st of 20, no contribution will be available until after July 1st. The other exception to this is if you were hired on or after July 1st of 2019, you will receive the state contribution after July with the start of our new fiscal year. The nice thing also about an HSA is it provides an opportunity for long-term planning. You own the money in the accounts. You can take it with you when you retire or if you leave employment with the state. I did mention IRS maximum contribution limits. For a single person, it is $3,550 per year, and that does include the state contribution of $500 if you're single. If you have employee plus spouse and or children, the maximum contribution amount is $7,100. And again, that does include the state contribution. So if let's say you've met the wellness qualifications and you're getting the employer contribution, it would be $7,100 minus that $1,000. So the max you should contribute to that plan is $6,100 per household. If you're 55 or older, you can contribute an extra $1,000 per fiscal year. So that would be something our system does not allow you to go over the maximum contribution amount. But if you're over 55 and you want to add an additional $1,000 to your health savings account, there's forms located on the BHR intranet site under BHR employees and then active employees, and it's under the forms section. So again, if you're 55 or older and would like to do that catch-up contribution of an additional $1,000, you can fill out that form. The other thing that we mentioned here is that you can change your HSA payroll contribution at any time in the plan year. So again, if you wanted to do that, you would fill out the form. You would put on the amount that you want taken out per pay period, because the manual form will override any electronic elections you may have made. So again, you'll do it for the whole year and the amount that you want taken out per pay period, and that'll override any elections made during annual enrollment. Next slide, please. Additionally, with a health savings account, there's certain eligibility requirements. Not everyone's qualified to make a contribution to an HSA account. You may not be eligible if you are covered by another health plan that is not a qualified high deductible health plan. If you're covered by TRICARE, if you are dependent on someone's tax return, if you are signed up for any part of Medicare Part A or B, you're not eligible to contribute to a health savings account. And then finally, if you have a spouse contributing to a medical FSA. If you are unsure of whether you are eligible or not, you should visit with your tax advisor for guidance. These are rules set up by the IRS, not by the state of South Dakota. So again, if you're not sure and you think you might be eligible or you think you may be ineligible, contact your tax advisor. Next slide, please. For the health savings account, you must activate your account before you or the state can make any contributions to your account. Discovery Benefits will not receive your enrollment until your benefits are effective. And to activate your account, you go to discoverybenefits.com. You select HSA, FSA, or HRA login. Then you would create your new username and password. They will ask for some specific information, some security questions, just to verify that it's you. And then you have to accept the terms and conditions. That is the really important step. You can go ahead and create a username and password, but if you do not accept the terms and conditions, you're not eligible to begin receiving or submitting contributions to your account. Make sure you keep information on your username and password, because we here in the benefits department do not have access to that information. And we would just redirect you to contact Discovery Benefits. Next slide, please. The next thing we're going to talk about is a medical flexible spending account. The medical flexible spending account usually is tied in with the low deductible health plan. Only you contribute to this account. There's not an employer contribution. It helps you pay for out-of-pocket medical, prescription, dental, or other vision expenses with pre-tax dollars. The difference between a medical flexible spending account, the FSA, and the HSA is you have to use it or lose it. So if you elect $2,000 and you only spend $1,000 of that, that other $1,000 is forfeited. Again, that is an IRS rule. That is not the state of South Dakota trying to take your money. So we like to mention that so that when you are electing the flexible spending account dollars, you're really budgeting for your expenses to make sure that you do not lose that money at the end of the year. So you have through September 14th to incur expenses for the current plan year. So for example, if you had the FSA for fiscal year 2020, you can incur expenses from July 1st, 2019 through September 14th of 2020. All of your expenses, though, must be submitted by October 14th. You'll see a big bold at the bottom of the page. If you are on the high deductible health plan and have a health savings account and elect to have a medical FSA, it can only be used for dental and vision expenses until you meet your deductible. And we'll go over that in a little bit more detail. The other thing to know about an FSA is that it can be used for eligible family members, not just those you cover on your plan. So again, it's for all eligible dependents. If you could flip to the next slide, please. You can participate in this plan even if you're not on our health plan. So if you have coverage through a spouse, maybe you can still contribute funds to the HSA account. I'm sorry, FSA account. I apologize for that. You can use the dollars that you contribute for any eligible family member, a spouse, dependent children, anyone you claim on your tax forms. If you leave employment with the state, you have 60 days to submit the claim, and the claim must have been incurred while you had active benefits. So let's say you left the state on let's say June 15th. You can only submit claims that you incurred through June 15th. And again, once again, that is an IRS regulation. I see we have a couple questions, but again, we'll address those at the end of the presentation. Next slide, please. As with an HSA, there is an IRS maximum contribution, and that is $2,750 per employee. The other thing about a medical flexible spending account separate from the HSA, once you make an election amount, you can only change it during annual enrollment or due to a qualified life event. So you can't elect a lesser amount or elect a higher amount and decide you want to change it throughout the year, except for during annual enrollment, or let's say you got married or had a child or got divorced. Those are qualified life events. And that would be, if you experience a qualified life event, you'd contact the benefits department and they would be able to get you the family status change form to make those changes. Next slide, please. And I do believe this presentation will run a little shorter than the allotted time, but that leaves us plenty of time for Q&A. The Dependent Care Flexible Spending Account is the next account we're going to talk about. This allows you to set aside pre-tax dollars for dependent care expenses. Dependent care expenses, dependent daycare expenses. This is not for dependent healthcare costs. I've seen people who think they can set aside the maximum amount of the IRS contribution and use that for medical, dental, or vision expenses. The Dependent Care Flex Spending Account is strictly for daycare or dependent care expenses for the care of a dependent who's under the age of 13 and or a dependent child or spouse who is physically or mentally unable to care for themselves. The other important thing to note about this Dependent Care Flex Spending Account is this account is to be used for daycare expenses related to employment or seeking employment. It's not something that you can use, say, if you just want vacation, you want to dump the kids off for a month because you want to go to Mexico. Again, IRS regulations, it is for daycare and dependent daycare or home care expenses. The same rules apply as with the medical FSA. It's a use it or lose it account. So again, you have to use the funds by September 14th of the current plan year or during your employment with the state. And again, there's IRS maximum contributions. Those contributions are $5,000 per household. Next slide, please. So the next thing we're going to go into is the combination flexible spending account. If you are enrolled in the high deductible health plan and have a health savings account, and then select a medical FSA, the FSA then becomes what's called a combination flexible spending account. If this pertains to you, you can only use it for dental and vision expenses until you reach your health plan deductible. Once you reach your deductible, then you will need to submit a form to Discovery Benefits to access the funds for medical or prescription expenses. There's still no, it's a use it or lose it account, just like the other flex spending accounts. Again, there's no employer contributions. Typically, most people are on the high deductible health plan and elect the HSA will not elect to have a FSA, a flex spending account, since they have the health savings account. With an HSA, as like I said, the funds roll over and are more accessible. But again, that's maybe something you need to think about if you have really high expenses and you want to max it out, you can. But again, remember that if you elect the FSA while on an HSA, you can only use it for dental and vision expenses until you reach your deductible. The forms for the deductible being met are also on the benefits website, the BHR benefits website. Next slide, please. The next thing we're going to talk about is a health reimbursement account. So these are a little bit different. This program is a non-contributory plan. In other words, you can only receive state dollars. You cannot put your own funds into it. And there's certain things that allow the state contribution to an HRA. If you're in an HRA and you're in the low deductible health plan and you participate in our Healthy Baby program, the state will contribute up to $500 into an HRA account. You have to meet certain terms and conditions of the Healthy Baby program, i.e. you have to start it in your first trimester and you have to complete the program. Now, this is for employees as well as spouses. So if you have a spouse who maybe becomes pregnant, they are eligible to participate in the Healthy Baby program and receive that up to that $500 contribution into that HRA account. These funds under a regular HRA can be used for medical, prescription, dental, and vision expenses. Then there's a combination HRA. With combination HRA, if you opt out of the health plan, you will receive $300 into your HRA account. Again, remember, this is all with Discovery benefits. The exception to the opt-out of the health plan is if you opt out due to Medicare coverage. The state is not allowed, per federal regulations under Medicare, to contribute money to an HRA account if you opt out due to Medicare. So that's a rule we have to follow. And opt out to Medicare was new this year, as received in all of your communications. If you are in the high deductible health plan and participate in our Healthy Baby program, the state will contribute up to $500 into the combination HRA account. Just as I mentioned above, there are certain parameters that you need to follow to receive that $500. But again, it is available to you and it's a really great program. With the combination HRA, these funds are limited to dental and vision expenses until you satisfy your deductible. Next slide, please. And again, I apologize, we're going to finish kind of early, but I wanted to give a high-level overview versus getting into a lot of detail, and then we can ask any detailed questions afterwards. Hopefully, seeing these broken out like this has helped everyone understand them a little bit better. So as I talked before, Discovery Benefits is our vendor for all of the accounts, the HSAs, the FSAs, and the HRAs. When you enroll, when you get enroll, you'll get a Discovery Benefits Visa card. You can use that Visa card to like pay for your prescription cost, to pay for your medical cost, to pay for your vision expenses. I do like to let everyone know that sometimes they need to substantiate or verify those claims that you submit because, again, these are all IRS regulated benefits, and sometimes they need to verify that information. So you may, from time to time, have to submit a receipt to verify that your Visa debit card purchase was an eligible expense under the IRS regulations. You must take all the necessary steps to set up your account at Discovery Benefits. We can't stress this enough. So we get tons of calls and emails from people asking, well, I signed up for payroll, I've got my card, but I have no money in the account. That's because you haven't gone in and accepted the terms and conditions. So again, make sure you do that. Set up your account, and that's when you'll begin receiving your contributions as well as the employer contributions. If you already have an HSA set up with Discovery Benefits, you do not need to do anything additional to set up your account as long as you've accepted the terms and conditions and have already used those funds. So a lot of people have asked me if they get a new Discovery Benefits card every year when we start a new plan year, and the answer is no. You'll only get a new card if you've already enrolled, or if you've just newly enrolled in the plan, or if your card has expired. So just like a regular debit or credit card, it has an expiration date on it. Once that expires, they will send you a new one, but you will not get a new one just because it's a new plan year. You just continue to use the same card that you have always used. There's also other ways to access your funds. You can use the debit card. You can also ask a check be made directly to your provider, or you can reimburse yourself. You don't have to use the card. You can submit reimbursements via paper form to Discovery Benefits, and have the check sent to you or to your provider if you so choose to do so. Next slide, please. And really, this is, like I said, it's really a high-level overview. I tried to give as much information as I could without getting into too many details. So I apologize for the shortness, or maybe you guys will be glad to have part of your day back. But now is a good time to ask any of those questions that we have. So the first question, and I do have Dawn Langley with me. So if I'm not able to answer some of these, I'll just ask her to type those in. If you can do that, Dawn. So I'll start going through the questions here. Do we log into the HSA discovery benefits prior to July 1st? And Dawn, should they do that before July 1st if they're a new enrollee? And if you could just maybe type the answer in, or you can unmute and answer if you'd like. Okay, so Dawn typed in, if you enrolled through annual enrollment, you will have to wait until Discovery Benefits receives the enrollment file, which will be around June 25th. So the answer would be probably better off to wait just around July 1st to log in and create your account. Oh, hope I didn't answer it. Dismissal. Sorry, open. Okay, here we go. You're a new high deductible participant for July 1st. You can't sign up on Discovery Benefits until after that date. That would be correct. Just because we have to send eligibility files over to them. So if you try to create an account, what will happen is they may not recognize you, or they may not have your information yet. So if you just set a reminder to yourself to do it around July 1st, that would be a great time to go in and try to do that. Have another question. So an HSA account rolls over from year to year without penalties, and that's absolutely correct. So if you put in, let's say you put in $7,100 this year and you didn't use any of it, it still remains there. You do not lose those dollars, and that includes the company dollars, so the state contribution and your own. They call it. I'm sorry, I lost my train of thought there. But you're 100% vested in that account with any funds that you contribute on an HSA. Have another question. Do you have to be pregnant to join the Healthy Baby Program, or can you pre-plan when you will have the baby? And you can absolutely pre-plan. You would just have to reach out to our vendor, which is Health Management Partners, or HMP, and they would be happy to get you enrolled in that program. It's a great program, and by enrolling in that program, you can also get certain free services that you would normally be subject to, maybe a deductible or an extra copay. So definitely reach out to Health Management Partners. Their information is on the benefits website under resources, and again, Health Management Partners. So from David, a question: with an HSA, at what point can you start moving money into their investment plans? I think it was at $8,000, but I couldn't find confirmation of that amount on the website. And Dawn, I believe you just answered that. It's $1,000. So you have to have $1,000 in there to start investing. Thank you, Dawn. I've been on the flex spending account for a while. Do I have to enroll with Discovery Benefits? If you haven't already enrolled, you absolutely should have gone on, created an account, and accepted your terms and conditions. You can't access funds until you do that. So I'm assuming you probably did. My suggestion would be, is if you have questions, and get a pen handy, is to contact Discovery Benefits directly at 866-451-3399. Again, that phone number is 866-451-3399. Anne, hi Anne, hope you're doing well. Who do we contact if we've lost the card? Again, you'll contact Discovery Benefits. I just read off their number, but one more time is 866-451-3399, and they can send you a new card. The next one says, can you again go over the timeline for an HSA? Are you, and let me, I'm gonna type in an answer because I think maybe you're referring to the FSA. How do you invest? And when I get the answer back from that other person, there's really not a timeline for HSAs. So FSA would be a little different. So I'll go back to that. How do you invest money from your HSA? You do that through the Discovery Benefits website. So if you've already enrolled, you've accepted your terms and conditions, there will be an option on there to start making investment choices. When will the state contributions for 2020 go into our HSAs? Dawn, that's probably mid-July, 7/1 or later. Yeah, I was there. You could tell when I asked Dawn. Dawn's our resident guru for HSAs, so that's why I asked her to be on the call. I tried to log in and it said they didn't have me in the system yet is our next question. If you just enrolled, that's because they haven't received the eligibility file yet. Similar to the previous questions, they will not get the eligibility file till the end of June. And then after July 1st, you could go in and try to log in. Someone say, could you give a brief explanation of the difference between an HSA and the HRA? The HSA is an account that you can, the state contributes money to for you, $500 single or $1,000 family, as long as you've met certain qualifications or met the eligibility criteria. But you can also contribute your own funds to an HSA account. As per the previous slide, you can contribute to an HSA account up to the IRS maximum contribution limits. With an HRA, the HRA is state funded. You get the HRA dollars based on participating in the Our Healthy Baby program, or if you opt out of the plan. But the HRA is non-contributory. So with the HRA, you do not have the option to contribute any funds to that account. Again, it's strictly state contributions. I'm sorry, I was distracted when you were talking about Medicare. Can I ask you to repeat that part? So with regard, I'm thinking maybe I'm wondering if you're talking Medicare opt-out. If it's Medicare opt-out, the state cannot contribute any funds to your HRA account per IRS regulations. Medicare also, there's certain eligibility requirements on the health savings account. If you are enrolled in any part of Part A or B Medicare coverage, you cannot enroll in an HSA account. Again, IRS regulations. Next question, if we already have an active HSA account, do we still need to activate the account for this plan year? And the answer is no. If you've been using your HSA account and spending funds, you do not have to re-register. From Jill, if I'm on the low deductible health plan, I want to switch to the high deductible health plan. Do I have to have all my FSA used up by 6/30? If you have switched to the high deductible plan, I believe that question is yes. Correct, Dawn? Yes. So that is correct. If you are on the low deductible health plan and switched to the high deductible, you do have to use up all your FSA funds by June 30th. I have anonymous. I currently have 2 requests for receipts needed. Can I take a picture of the paper bill received from my provider to upload as a receipt? That should work. Also, I always encourage everyone when they're looking for receipts, if you have an explanation of benefits, say from Dakota Care, or if it's a prescription, or that'll make sure you want to give them as much information as possible. So I've seen people just submit a statement which doesn't provide any details, and they will ask for additional substantiation. So you can upload it to the website, but again, they may come back and ask you for more substantiation. Next question, is the state contribution in an HSA vested for the employees at 100% from enrollment, and it is. So whatever money is contributed by the state and by yourself is always 100% yours. I have not done an HSA or an FSA before, and I have 2 almost teens needing orthodontics. Would it be good to use a combination HSA or FSA? Well, we've already gone through annual enrollment. If you're a new employee, you can select the FSA or HSA. It's actually a combination FSA, so you got them a little switched around, but that's okay. The nice thing is, yes, you can use the funds for orthodontics. What will happen is you can, again, if you haven't enrolled for the HSA, you would just want to submit a paper form to us and we can get that started as soon as you want. But yes, that's really good funds to use for orthodontics because I had a daughter with braces, and that was, 800 years ago, and I remember it being about $7,000. So yes, you can use that money for orthodontics. I just had a thank you. The next question. If I sign up for the Healthy Baby program but did not get pregnant for 2 years, will I have to re-sign up? I would assume that would be a yes. When you reach out to HMP, they will let you know the time frame. If you're going to retire or have retired, what do you need to do with your HSA account? You can actually leave it with Discovery Benefits if you so choose to, and pay a small monthly maintenance fee because you're no longer an active employee. The state's not going to pay that monthly maintenance fee. Or you can speak with your tax advisor or financial counselor, and you can roll it over into another qualified HSA account with a financial institution of your choice. But again, you can also leave it there, pay the minimum monthly maintenance fee, which is, I think it's about $2.50 a month, and you can just keep using that account. Question, how much does the state contribute to the HRA if you aren't having a baby? The only times the state contribute to an HRA is one, if you opt out of the plan, you receive $300 excluding the Medicare coverage, or if you're in the Healthy Baby program. So again, to differentiate, the HRA is a non-contributory plan. So you only get that under certain criteria. One is opt out and one's Healthy Baby. Otherwise, there is no contribution to an HRA account. Another one. So the HSA account does not follow the fiscal year. It does follow the fiscal year. With HSA, do we have to request reimbursement within a particular time period? No. With HSA, the funds are always yours. They roll over, and you can leave them there as long as you like. I have Drake Moore. I was told because of the CARES Act, we have under the middle of September to use the FSA funds. With regards to the CARES Act, we have not made any changes to that within the state plan because we do allow you to incur your funds through September 14th. The CARES Act really almost was more for people on a calendar year plan. We're on a fiscal year plan. We do have that long run out period. So we will be, your account, your FSA funds do have to be used up by September 14th or expenses incurred during September 14th. The one thing I would like to mention here is that with the CARES Act, President Trump signed a bill, and almost all over-the-counter medications are also now eligible for reimbursement or for purchase under HSA or FSA. Can I use leftover FSA funds in the FSA store? Yes, you can. Or you can also use, again, a lot of over-the-counter stuff that wasn't covered before is now covered, and we do believe that will be continue on. And I have a question to clarify. Thanks, Dawn. HSA contributions follow the IRS calendar year, not the fiscal year. So the IRS maximum contributions for the HSAs is 1/1/2020 to 12/31/2020, not the fiscal year. I apologize, and thanks, Dawn, for clarifying that. Can we use HSA deposits from July 1st through June 30th, 21 to pay for medical bills? that occurred prior to electing the contribution, and that would be no. You have to incur the expenses during the time you've elected that. Correct, Dawn? I mean, you can't use it to backdate old bills. I'm a state employee, and I presume that the funds in my HSA can be used for my entire family. Is the state contribution for my family only $500 per year? If you have single coverage under the HSA plan, they will only contribute $500. If you and your dependents, if you have dependents covered under the plan, then it goes to $1,000. But to answer your question, you can still use HSA funds for all qualified members of your family. And you have to be HSA eligible to use the funds. So if you have a spouse that's not under our plan, is under her own low deductible health plan, she would not be able to use the HSA funds. You have to be eligible, or there could be IRS tax ramifications. From Chris, I have an HSA and an FSA. Can they be used for ambulance services? As long as you've met the criteria we discussed above, yes, they can. Those funds are used for out-of-pocket expenses that are not otherwise covered by your health insurance. And then I have another one. Can you use HSA account toward health premiums when you retire? Dawn, do you know the answer to that off the top of your head? And I apologize, I just started learning HSA accounts. I believe you can, but I'm waiting for Dawn to answer, so I'll wait till I hear from her. You can, but she said you should speak to a financial advisor or tax consultant just for confirmation. If you have questions about that, you can always reach out to Discovery Benefits. You can reach out to your tax advisor or your financial advisor. So it looks like we've had all of the questions answered.
And actually, I'm going to interrupt you, Kim. Apparently, some people used chat for questions. It looks possibly like, find it. It looks like we did have some go over to chat, but I'm having difficulty. I can't see that.
Okay,
but you should be able to.
Let's see. We had one that says, will this be recorded for those that couldn't attend? And it is recorded, correct, Michelle?
Yes.
Yes, that's what I thought. I know we have the PDF, but all of these are recorded for future viewing.
It should be, we should be able to do what we need to do with it and potentially get it up by the end of today.
Okay. I'm just scrolling down. Let's see. A lot of them are from when we were trying to troubleshoot, Michelle.
Okay, that's good.
I know, we can do it. Let's see. I think I've already answered this one. If we already have an active HSA account, do we still need to activate it for the next plan year? That answer is no. And let me keep scrolling down. I think most of the ones in the chat came up on the questions. We did have a new question from Brenna, and that is, can you clarify about using the HSA account for past bills? I have an HSA account and it has $0 in it right now. On or after 7/1/20, I'll have $6,000 in it. Can I use this money for an appointment that occurred in February 2020? Dawn, do you know this answer? Or should they call? Do you think they should call Discovery Benefits to clarify that? And I can't get my, oh, that's because I'm not on chat. It says if you were HSA eligible on 2/1, then yes. But if you want to call, I mean, I can give you Dawn's phone number. Why don't you can give her a call on the benefits line at area code 605-773-6027. Again, 773-6027, and Dawn can walk you through that. The next question I have is, do I have to make payroll contributions into my HSA account? And the answer is no. If you're eligible to receive the state contribution, you can just receive the state contribution. You do not have to put any of your own funds into the account. It says, my wife and son are covered by my Dakota Care health insurance. Should the state contribution to make HSA be $1,000 instead of $500? And yes, if you have family coverage, your HSA should be $1,000, assuming you've met all the qualifications and all the eligibility requirements. All right, well, if anyone has any more questions, I can hang on the line for a couple more minutes. Otherwise, again, thank you for all of your good questions. Thank you for attending our Lunch and Learn today. Again, these can get to be a little confusing. So as a reminder, for probably about the third time, this presentation will be available on the BHR website under the Lunch and Learn series. And I think that's about it, Michelle. So we will go ahead and end this presentation. If you, I got to thanks Kim and thank you very much. And thanks to Dawn Langley, who's behind the scenes helping me answer the questions that I can't answer. Thank you. And one other friendly reminder is that all of this information is available as well in the decision guide, fiscal year 21 decision guide. So if you need to reference back to that, you can. Or at the beginning, we gave you the benefits website address, email address. Don't ever hesitate to call us or email us, and we'll be happy to help you out. Everyone have a great day. Thank you so much.